What's up, everyone? Today is the 22nd of December 2020. This is an opening trade alert for Costco. I actually opened this trade yesterday on the 21st of December, but I didn't have time to make the video until today. However, this is going to be a good example of why these trade ideas can be opened, later in the same day or later the next day or even sometimes a couple days later. This price basically hasn't changed in the last 24 hours. So anyways, yesterday I sold the 325 put for the February 19th of 2021 cycle, and I collected a $2.85 credit. Let's check out the trade tab details. I pretty much exclusively trade in the 30 to 60 day window on the monthly time frame, so avoiding these orange W's. That puts me right here. Yesterday this was 60 days, today is 59. Sometimes you get these in-between schedules where this was under 30, but this was over 60. It's not a big deal if you go either way. In those cases, I would go for the longer one. I think at one point this was like, 28, and this was like 62 or whatever, 64. So I would definitely go with the 64-day window there. A couple days doesn't matter. However, if you go on the short side of it, that can matter a little bit because you get more exposed to the underlying stock price movement. Anyways, I went here. It was 60 days yesterday. It's 59 today. You can ignore these strikes here. I sold the 325 put. Looks like it swung in my favor again here, but at one point earlier today, it was selling for roughly the same 285 that I sold it for yesterday. Looks like right now it's selling for 257, so I'm up almost $30 from yesterday. My entry guidelines are anywhere under the 30 delta or lower. I usually end up right around the 15 delta, which puts you at this dashed line here, which is a 1 standard deviation away from the current stock price. Sometimes on these bigger tickers you can get way out here to the second dash line, which is 2 standard deviations, and collect a decent premium. But Costco here, I'm right at that 1 standard deviation at the 13 delta, which is great. This currently gives you the 257. That gives you an 88% pop, a 93% P50. Max profit of 257, which I shoot for 50% of that. The max loss if Costco decided to go to zero would be $32,000. Hypothetically, that sounds really scary, but in reality, you won't get anywhere near that. And then Costco is definitely on the high end of buying power right now. This would need $4,474. And being a naked put, this would be an undefined risk trade because these can fluctuate, right? So if this goes against me, I guess the max loss is technically locked in, that you can't go any farther than zero, which would be a loss of $32,000. However, your buying power effect can fluctuate. So right now it's at like, 44, 4,500. If this goes against me, that could go to 6,000 or 10,000 or whatever. So if you want to define your risk, you just need to buy a farther out of the money put as protection and turn it into a vertical spread. So in this case, I would buy the 320. That only gets me 53 cents though. I usually like to collect $1 when I do these spreads. So I'd come down here and I'd move the strikes down. Go a couple times. Now this, for whatever reason, that doesn't keep moving. There you go. At 340 and 335, you get exactly $1. So if I lock this in here, that equals a 75% pop. It's slightly lower because you're at 340, right? You're slightly more aggressive on your strikes versus I was out here to 325, so that gives me a higher pop. However, my buying power is much higher. So 75% pop, 80% P50. That gives me a max profit of $100. I would shoot for 50% of that, so it would be $50. And then my max loss and my buying power effect are both locked in at $400. So if you have a smaller account, or if you just want to lock in your buying power effect and your max loss, then the vertical spread is a great way to go. Whether I do the vertical spread like this or the naked put, I shoot for roughly 50% of my max profit. Oh, and I guess one last thing here I kind of forgot is the deltas here. I don't go any higher than about 30, and this works out perfectly. You're at the 24, and then you buy the 20, so that fits. Also, you can see here the W right here. That means I have a working closing order already submitted for my 325 put. Basically, as soon as I open a trade, I will go into that position and submit a preliminary closing order of 55% of my max profit. That way, if somehow I get a quick mover and I'm not paying attention, then boom, it'll fill at 55% and I can move on. With that being said, anywhere around the 50% of the max profit is what I'm shooting for. So if I notice it's close to that 50%, I will change that order and get it filled manually. All right, I think that covers everything in the trade tab. Guess we can take a quick look at the chart here too. All right, so if you're a visual learner like myself, I always like to look at the chart real quick, just to kind of make sure the deltas and the percentages that I'm looking at make sense for the trend of the stock. So the technical analysis on this is pretty simple. Basically, Costco had this big run up. Now it's been selling off here for the last couple weeks. Seems to have met a level of resistance or support here. You know, the RSI is pretty low. The MACD is pretty low too, and seemingly starting to bottom out. So as you can see with this vertical line here, I opened the trade on the 21st of December 2020. I sold the 325 put at $2.85, which is way down here. And when I opened this position yesterday, the underlying stock price was $363. The underlying stock price has actually gone down just a little bit since yesterday. It looks like about $1. The reason that I'm ahead on this trade right now is A, I technically have 1 day of time decay in my favor, but B, the bigger factor is when I opened this position yesterday, the IV rank I think was like 19.2. And then I noticed this morning all of a sudden the IV rank had dropped to 16.2, so 3 points lower, which as a seller is good for me. When the IV rank drops, the same strike loses value in that trade just for the change in IV. So this is a perfect example of that. You know, it's only been 1 day and the stock price is actually $1 lower, but since the IV ranked dropped 3 points, that same strike price that I sold yesterday has actually lost some value. Even though the underlying stock price has swung against me, I'm actually ahead in the trade right now. All right, so this one's pretty simple. You know, most of the time I don't put in these big technical analysis on these things. I usually just look at the chart, make sure it makes sense and kind of matches up with the option chain, and that's kind of it, you know. Obviously nothing's for sure. Technical analysis can be wrong. Even the option chain and the percentages can be wrong, right? I mean, just because something says you have a 90% pop doesn't mean it's actually going to be a 90% pop. It's all based on statistics and mathematical formulas. And I mean, obviously 90% is not a sure thing. So even if you have a high pop, nothing is for sure. So anyways, I just like to give it a quick rundown and see if stuff kind of matches up and makes sense. If it does, I go with it. If it doesn't, then I look somewhere else. All right, I think that covers everything. Let me know if you have any questions. Trade small, trade often, and I will see you in the next video.